doing?
Sorry, I was just gonna charge it and then I'll go.
Can you just stop? I'm not started yet.
Before you started it.
that was a new artist. Interesting. Not too bad. I like that sort of music. That's the sort of gaming music you get. Also, they write the themes, the background music there for the for Hollywood blockbusters, especially also there's a whole industry based around the trailers, and so the trailers are meant to be as impactful as possible. So there's a whole group of composers who just make what is termed epic music. Maybe not as epic as that. That's a bit hard, but it's good to jam or study with, as long as it's not too loud. Alright, so yesterday we're talking about US dollar weakness or strength, how much overflow we're going to get from the Fed. Today we didn't get too much more information. Yeah, we got some weakness coming through on the pound. You didn't get much of an extension there for the dollar yen. In fact, just going to put this up there so don't trade by mistake. You've got the pound breaking 130, but the dollar yen not breaking towards that 103, and the euro dollar holding its strength. So all in all, you haven't seen too much movement on the US dollar. If anything, you're starting to see a little bit of US dollar weakness at the start of this session. And I think we're talking about who's going to be more impatient here. And definitely the bulls are going to be more impatient. So dollar yen buyers probably start to pare back. And if the euro can start to grind higher, then you might see that US dollar weakness come back. The yields in the US are starting to pull down, suggesting that the idea of a September rate hike hasn't really grabbed hold. You haven't seen it come across into the stock market. That's a reason to sell. Stocks are still grinding higher. So US dollar is definitely on the back foot. It's beginning to show signs of that, right? So let's just see. The Aussie dollar is continuing to charge forward. It's the strongest currency in the market. It is overtaking its cousin in the Kiwi dollar, extending higher here in the Aussie Kiwi. So this is a trade we're on since the RBA cut. Now, we may have a similar trade coming depending on how the RBNZ plays it on Thursday for the New Zealand dollar. It's buying New Zealand dollar against something depending if the RBNZ goes nuclear or not. If they don't, I think the Kiwi will rally after the announcement. So, dip down, I'll be looking to buy that dip as long as we hold above 70 cents. And they don't cut by 0.5. If they cut by 0.25, I'm looking for the buy. We're going to talk more about that tomorrow. I've been thinking about it though. This is just too weak, the US dollar, and too strong, the risk on, for the Kiwi dollar not to outperform. And so, central banks leaning on a currency or trying to hurt the currency doesn't usually work if the sentiment is against them. And so we've seen the Aussie in the past. I mean, it rallied up to 110. I was there when it was at 110, and the RBA had been leaning on it since 95, wanting it to go down. And so it was just relentless in this push higher. I'm not saying that the Kiwi is going to go on a rampage like that, but I'm saying that the road to 75 looks easier than a sustained US dollar rally right here to me. So I'm prepared for that sort of outcome. Aussie dollar, interesting. Had another bout of negative news today. Did nothing to its momentum. Just bought straight back into that dip. If we break this 76.60 level, it is likely that we're going to charge 77, and then tomorrow we're looking at a completely different setup technically, and 78.50 comes into the cards. And if the US dollar is beginning to weaken, as it looks like on the euro and the dollar yen, forget about the pound. The pound's doing its own thing. The pound and the US are kind of like competing for the weakest currency out there. Pound, Kiwi, and the Kiwi dollar. The US dollar. And so we're just going to keep on keeping on here. The way I'm playing long Aussie is still through the Aussie Kiwi long. I suggest if the Aussie breaks to 107, we're going to get that move. Then after the RBZ cut, pretty sure we're going to get filled here on this this 109, 40, 30, 40 level, which is going to be a good profit. Make up some of these bleeders that we got on, particularly the pound there. The other trade that we have going that's doing well is the Euro Swiss. Look, we suggested we're going to close it out at 109. It's here now. Nothing wrong with taking a little bit of profit. We're going to reset if we get down to the low 108s. This one's been trading in that range. There's no reason to suggest it's going to break to the top side just yet. Just wait for that next opportunity. That's all we're going to be looking for here. If we break out to the top side of the range, that's our preferred way of trading anyway, then we'll be raising our level of entry. Alright, but Aussie Kiwi, if you're not in the market, probably don't buy just yet, because it is similar to buying the Aussie right now. It does look like it's going higher, but you don't want to be the only one, caught in some sort of reversal or false break. Yeah, so if you're in, just leave it. You missed it. Dollar yen. Range trading, I suspect, right? Range trading to downside, depending on how the Nikkei goes. I mean, the difference between the dollar yen at 102.30 and the dollar yen at 107 last time is that the Nikkei, which is an important part of why the dollar yen moves, is this time all the way back almost towards that 107 level. Let's have a look, maybe 4 hours better. Looking at 22nd. Okay, so the Nikkei's nearly there. We gained all its losses and the dollar yen's only gone up 100 points. So those who are suggesting that we're going significantly higher in the dollar yen, because the stock market's going to rally, that's breaking down. That's what we call decoupling in the market, and it's this correlation that's surprising. And we're talking about buying dollar yen after the NFP. This is not the price action you want after that NFP. This is actually a pretty weak rally. This is a small bounce compared to what we could have got in previous sessions. If the correlations were still holding, we'll be back at 105 based upon that move in the Nikkei in the last few days. So something to keep your mind on there. The dollar yen starting to break down, doing its own thing. When it starts to do its own thing, that's fine. That means it can go range trading and not impact the euro rally, not impact the pound rally. Just be a casual observer there, while pound yen, euro yen also track its major high. Not the usual way that these pairs move, but definitely I've seen it before. It's just lately the market's starting to do some pretty crazy stuff. CAD's breaking down from the dollar CAD. CAD's breaking down from the oil. Aussie's breaking down from Chinese trade balance data. Chinese data in general is not moving the Aussie anymore. There's a few things happening. Risk sentiment and the stock market and the risk currencies is breaking down a little bit. There's a few things happening that we haven't seen for a while, and this is possibly start of a new set of correlations, where maybe stock markets and the euro are going to be correlated again. And once you get the euro in action, it's sort of like the leader of the pack. It's the biggest pair in the market, it's the biggest weight, and if it starts to move based upon the stock market, and at the moment it's not moving based on anything, it's not moving, then you get everything against the US dollar type situation, and that's a lot easier to trade. That's a lot easier to see the next move. When everyone's doing their own thing, like commodity currencies and the what you call the major block there with the euro, the pound, and the dollar Swiss, when they're not doing the same thing, then it's harder to sort of trade those minor pairs. And it's much easier when it's risk on, risk off. We had that for like 4 years, between 2009 and 2013. It was very easy to trade. So hopefully we get something back like that. Perhaps as the market you know, as the yields in the US start to fall, you might start to see that come back, because then the whole US dollar strength story is based upon a divergent monetary path between the Fed and ECB, BOE, and the BOJ. If that divergence sort of becomes a problem for 2017, then you might get a new setup here for the market for the next few months. You know, at the moment, it's very hard to find inspiration to do any trade. You know, right today, it's like, well, you know, you have a belief the US dollar is going to get weak, then you might buy the euro. You know, but it's very hard to justify any of these views based upon the current price action and/or certainty about the Fed's next move. It's just we're preparing for a new trade to develop. You know, so the only one which is really clear, pretty clear at the moment, is that the Aussie is finding support on dips, every dip, and that it's pushing up against a major resistance, threatening to break out, and it's probably going to break. Yeah. You know, 7 times out of 10, 8 times out of 10, this sort of development doesn't end with a reversal. So let's just see. I mean, who's worried right now? The shorts or the longs? The shorts for sure. And that's the litmus test that you want to have in your favor when you're buying. Alright. I mean, stock markets are just relentless. DAX is now testing 10.5. It's a new high. New high? Let's just check that. New high. Yeah, so post-Brexit high for the DAX right now. With little fanfare, with little excitement. That's the current market. Oil? Yeah, oil's attempting a rally. Alright. It's too early to say whether this is just a little bounce as well, right? Now, if we do get a substantial gain here, say back above 44 and holding and, you know, trying to attempt to get to that 46, then the pair which really comes into play is this dollar CAD. So the CAD's been underperforming. A lot of you trade the Aussie CAD, New Zealand dollar CAD. CAD's been underperforming for a while now, and it's still got a few hundred pips in it to the downside to get down to the equivalent level of where the Aussie is, you know, around about 129, 128.50. And so the thing that's been holding it back has been that oil slump and the decoupling from oil and a little bit of weak data at some key times there. I mean, the last thing this pair needed was that really strong US data and the really weak Canadian data on the jobs data on Friday. But yeah, so this pair in particular is one which is showing signs of a lot of weakness and grinding higher, when a lot of the other pairs are showing strength, you know, so the Kiwi dollar and the Aussie dollar. And so this one's out of place. This one is the odd one out at the moment. And if we get that rebound in the oil, then all of a sudden there's 200 or 300 points catch up for the Canadian dollar. And we'll probably play it against something like the pound or against the euro, just because we get more pips out of it, and it's a little cleaner. Against the dollar CAD, we have to play with the US dollar, but the outperformance that we're talking about, it'll be the outperformance of Canadian dollar against everything, and then it's buying the Canadian dollar versus a pair, and the pair that's doing nothing or just neutral, maybe like the euro or the pound, might become the better play, or the Swiss, depending where the Euro Swiss is. But we'll talk about that if we get the chance. At the moment, it's just a trade idea. There's a divergence between what the Aussie and Kiwi is doing and the Canadian dollar. It's, in my head, around about 200 pips at the moment. If the oil continues to rally, then that becomes a trade worth investigating. But this is the sort of trade where it's like the market's pricing wrong, I know better, and it's going to come down. That's a very dangerous mindset to have. What you want to have is this trade idea and then some good buying of the Canadian dollar, which is dollar CAD selling. So potentially across onto the Euro CAD. Let's have a look at that, because that's where we'll do it. And I actually didn't plan this talk. This is this idea is organically coming to me as we're talking right now. This is sort of the genesis of a trade idea. So it might sound a little bit wordy, and geez, you're talking a lot. Yeah, fucking talking a lot, right? He's talking a lot of shit. That's what some of you be saying. Fucking your tech traders. How can you tell me what's about to happen before that happens? I'm saying, look, there's this little bit of divergence here that doesn't make sense, and this graph here, this is the Euro CAD, looks very different. And make sure it's on the same time scale. Looks very different to what the Euro Aussie looks like on the 1 hour, and that's not normal. Usually they look pretty similar. So there is potential here for. Oh, okay. Let's be fair. There's potential for there's two ways to look at this. Either CAD's is the right one and the Aussie's outperforming and the Aussie's going to correct, or the CAD is the one underperforming and will correct if you get the right situation, which is that rally in oil. I'm pretty. I think it's the form, the latter. The CAD is the mispriced one here. So I'm looking for the right price action that's going to help me sell Euro CAD. At the moment, it looks like it's going to rally. Yeah. But I'm ready for that one. It might not be Euro CAD. Yeah, so basically Euro is a bit untradeable. Pound, a lot of my clients are ringing me up asking me, can I buy the pound? Yeah, I mean, you want to go to war, it's not the worst level. Is there a catalyst for a rally yet? No. Is there a scenario where this rally is 500 points? Yes. If the US dollar weakness becomes systemic, then yeah, I mean, the short covering will begin and won't stop. This time you don't have the BOE to come and save you. Alright, but the flip coin of this is that the reason the BOE is cutting rates is because they expect data to get really bad in the UK in the coming months. So if you're running this long pound idea that you're going to get some nice data surprises, you could be a situation where both the US dollar and the pound are both terrible, and the data just keeps on coming out bad. So in that scenario, I don't suggest you buy just yet. Wait for a reason, and then sure, get involved. 128, maybe. 125, yeah. 125, we're buying maybe just for fun, just to see what happens next. Just because, I mean, that's only a game you can play if you know you can hold a trade for a long time. If you don't know you can hold a, you don't, just stay away from the pound, because it's a little bit of a cheeky devil. But right now, I mean, it's tempting people, right? It's tempting people. That's why clients are ringing up. I want to buy this. I'm like, okay, tell me your reasons. Oh, it's cheap. Not the best reason. Which pair you want to buy? Pound straight? Pound yen? Okay, pound yen. Where do you think stocks are going? All right. Think there's a chance of correction? You really want to be buying pound yen if there's a chance of correction? That's the logic you have to ask them. I mean, is there a chance of correction? Not always, but we're fresh record highs last night. Stocks are just going ballistic, everyone. So yeah, buying pound is dangerous. Selling pound, you got to watch that trade. I mean, okay, yeah, the trend's down. It's got potential to go lower, a lot lower. But it's the sort of trade you can't go to sleep with. It's the sort of trade where the market starts a short squeeze for no reason, like even just a big takeover. Because this is the thing, that SoftBank buying that $20 billion company in the UK. Other countries are looking at the UK companies going, "Ooh, that's cheap, that's cheap, that's cheap." Well, this investment's now 30% cheaper or 20% cheaper. You know what I mean? Like there's reasons for investors to be looking at UK companies, and that sort of M&A flow can be quite large and sort of relentless. Like, why is You will be talking here at some point in the next couple of weeks for sure. Why is the pound rallying? It doesn't need a reason. The next couple of weeks it'll be like a relentless 200-point rally. I don't know from what level though, right? And then we find out a little bit later, oh, this company is now buying this company. Yeah, and so that's the sort of thing which can spark a rally. Then the shorts start to cover, technicals change. A couple of traders say, look, whatever you tech traders want to say, we've got a doji, whatever you want. Oh, the fifth wave of Elliott just hit target, something like that. But for whatever reason, the tech traders get involved because it looks nice for them and it's got a setup for them, and that's what happens, right? They're not buying now because it doesn't meet any criteria for the tech traders. But you get a reversal and a 200-point rally and starting to show strength. That's when the tech traders start to get involved. So, and then the short covering just continues. It evolves into a short covering rally. And why can a short cover rally happen in this particular market? Because there's record short open interest positions if you check the COT report. All right, so there's many things in regards to be watching for this rally to come, but where it comes from and why it comes and when it comes, where, when, why, pretty big questions to be answering if you're gonna ask me for permission to buy this pair. All right, just wait for it to begin and then we'll hop on. If you watch the market enough, it'll begin in a UK session for sure. Alright, so let's just see if that data comes in. Maybe the data in the UK doesn't come in as bad as expected, as the central bank expects. Maybe these fears about Brexit are overblown, and you get this nice recovery rally all the way to 138. Okay, that easily can happen too. So, at this point though, the sentiment is dreadful, and the price action is pretty dreadful too. Yeah. So if you're going to buy small. And if you make money from it, don't think that you're a hero, right? It was going to rally at some point. So don't trade big and I don't know. If the market continues to fall, try not to add to it. That's really hard to do as a trader. Especially now that you're thinking the same argument holds. Well, we're at 128. I've got one at 130. I've got one now at 128. That's okay. All right, I'll give you one at 128. No more. All right, no more. And only if you're buying smaller than usual. Okay, that's a trade plan which makes a little bit of sense. But if you're going to do that, you're going to be holding to 133. 133 at least. Otherwise, your risk reward on this whole trade just doesn't make sense. Okay. All right, so that's the pound in a little bit of detail. And if you're looking for reason to buy the pound, look at the dollar index and also look at the euro dollar. The euro dollar, if it starts to rally, it could help it out. But we've been waiting now for the euro dollar for months, literally for months. It hasn't been doing anything. So when it finally picks a direction, that's going to help us with a lot of our trading. Alright, so we're going to check a little bit of data today. I'm going to go through what happened with the Aussie earlier. Why did it fall so sharply in the Asian session? A couple of people have been talking about this Bernanke article. I don't think I'll read that on the stream, but it's could be interesting later. Alright, so what's going on with the Aussie? There's a little bit of weak data here during the Asian session, but it wasn't really that moved the market in my opinion. It was that one of the big four down here came out with new analysis of the central bank. So the big four there's four big banks in Australia. And this is one of them. And I don't know why it's embargoed until... I mean, who do these guys think they are? Actually, it was embargoed because it was coming out with the weakening business confidence data that comes from that. So earlier today we got the business confidence for don't want to mistake in the time for July, and it came in a little weaker than previous. But previously, obviously, these analysts have been reading that and suggested now that not only is the RBA going to cut one more time, it's going to cut a second time, and then on the cards is some unconventional monetary policy. All right, so that's 1% interest rates with some QE, which is pretty crazy, right? We haven't had a recession yet, and we've got 1%, 1.5% rates, and we haven't had a recession for 19 years. Like, we're out of control here. And we've got a housing bubble, and they're going to start cutting rates even further. Wow. Just because inflation's running low? What about you just redo your inflation target, right? Lower your inflation target, then we don't have a problem. Look, I'm happy I've got a house, all right? The house goes up in value. I want to see an explosion of housing prices, but this period is going to be known in the future as a great economic experiment. So this came out, and along with that weakening data and a little bit of heat out of the Chinese data, you saw the Aussie start to sell. Nothing too crazy though. And as soon as it was done, had a little think about what to do, and it was like, well, let's have another rally. And it's been doing that a lot. Okay, that was NFP day, new highs, a little bit of selling come Monday, but nothing too crazy. This the sellers got to be running out of patience, right? Yeah, so let's see how this develops in the next couple of days, but pretty sure it's going to break topside. You have to be pretty brave to be selling. Alright, so that was caused by, this little article. Nothing too major though. Just one of the big four. That's definitely cuckoo stuff. So it's not mainstream yet. Alright, and for a bigger macro picture, we're just going to check with Jim Reed. So we've said this before, this is one of the most widely read news articles in the morning. On the news articles, little daily research notes. It's just good to know exactly what is in focus, because sometimes you miss, right? Something happened in, say, German 10-year, or something happened in the US 10-year. And if you don't watch bonds, or you don't watch oil, or you don't watch gold, then you get something big happens, or someone's worried about something, then you find out about that. Start of European session. Yeah, not much here. Very quiet day yesterday. Very quiet day expected today. Really, the big event's going to be this RBNZ on Thursday morning, guys. Let's have a little look here on the global flows, though. maybe something interesting for us. All right. That's interesting. I didn't know that. So leverage selling of the Kiwis getting oversold levels. That's not great. That argues more for a bounce straight after the RBNZ. Okay. And that's sort of what we're going to be looking for as well. So we've been forming this idea of buying the Kiwi. We alluded to this earlier. Buying the Kiwi after the RBNZ if they don't deliver something, absolutely spectacular in the press conference. Very unlikely they cut by 0.5. So they cut by 0.25, and then they have to do something to get the market selling. If not, then I think if the market starts to rally, then the rally is not going to stop. It's just too many people looking for a high yielding currency. Risk on sentiment's too strong. US dollar's too weak to stop it. Alright, so this is interesting. Basically suggesting that we're going to get some real money selling based upon the Bank of England's. I don't know. I mean, I think it's a little different this time, and the market's a lot lower. So I wouldn't read too much into that. Alright, guys. So just to recap, we're looking for the potential here for the US dollar weakness to return. It's showing its head a little bit. Stay away from the pound in the current market because it's starting to do its own thing. Look at the Aussie dollar to break higher. Remain long Aussie Kiwi if you are long Aussie Kiwi. Careful about shorting the Kiwi, given that expectations could be priced in already. But anyway, right, if the Aussie breaks higher, then this is going to go higher by itself. Alright, so it's not so much about the Kiwi. This is a little bit more about the Aussie. And keep an eye out on the Canadian dollar as a potential buy if oil continues its recovery. There's a lot of buying of the Canadian dollar to be done if that oil continues to pop higher. Alright, is there any questions while you got me here, guys? Unfortunately, no real new trades today, just maintenance on the old trades. Is it my... Look, I like technicals, DRC, DP. I mean, I like them because they work at certain levels. 200-day moving average is great, and fibs are great. They're good for getting entries onto some of my bigger ideas, right? Which are mostly fundamental and sentiment based. And intermarket trading is all about knowing what the relationship of all the different products out there are. So bonds to the stocks, to the Forex, to the options on Forex, and knowing what's going on, and then seeing when something's misaligned or seeing when something's beginning and hopping on. Now, texts don't let you know that. Texts just let you know there's the trend and sort of oversold and undersold. I like to know why it's moving and then look at the technicals for my entry point. That's just my style. those who trade technical perfectly, you know, they believe in technicals because it works for them and they make money from it. But then again, you know, I mean, they sort of have faith in it. They have faith in it, sort of like magic. They don't know why it works. It just works, and that's not good enough for me. So I was a bit too inquisitive about the whole market structure to leave it at that point. Now the problem with this is a little bit of fundamental knowledge is dangerous. You know, it starts to affect your trading negatively, probably. Just like a little bit of technical knowledge is dangerous. All right. That's why I don't profess to trade off technicals at all, and I use the very big ones which are not argued about, like the 200-day moving averages or the big fibs. You know, it's hard to argue with that. But yeah, I'm not really into harmonics. I'm not really into elliott waves, and I'm not really into RSI. I've been killed too many times trying to buy an RSI underneath 10. Yeah. Alright, so look, we'll be back tomorrow, guys, 9 GMT. A couple of other streamers are very good at technicals. If you have any questions about those with them, you know, they'll go into depth about certain pairs, certain different methods. But yeah, no, we'll keep it mostly fundamental here, boys. Alright, have a good night, guys.